exciting questions coming. Please open your poly markets. But I mean, there's no doubts crypto ETPs in Europe and more recently ETF in the US have been accelerating crypto adoption, bringing a new set of investors into the space. So I'm excited today to have 4 representatives of the most innovative and prominent asset managers in the digital asset space. So without further ado, Matt and Cynthia, can you please introduce yourself as well as how your firm is accelerating crypto adoption?
Hi, everybody. Matthew Sigel, Head of Digital Assets Research at VanEck and a portfolio manager on one of our liquid token funds. VanEck has about $115 billion in assets under management, in business since 1955, a long history of investing in gold and gold mining stocks. We're kind of Austrian economists. We have one of the 11 Bitcoin ETFs, along with 20 plus other products, ETFs in Europe, US, Australia, active strategies run out of New York, a stable coin that you heard from in the last session, an NFT project, a venture fund, and we're building a lot in the space and look forward to the panel. We do work with Kiln in Europe, so thanks very much for the invitation.
Thanks for coming. Cynthia?
Okay, so I am from Fidelity Investments. My division at Fidelity is on the buy side. We are part of the asset management division, and we are digital asset management. We are focused on not just building investment products, including products that allow for both retail and institutional investors to access this space, but we're also very much focused on looking at other ways in which the blockchain technology will enhance the way in which we are going to be able to deliver investment exposures to our clients, and that's through tokenized assets. Fidelity has been involved in this space for over a decade now, and you know, a lot of us talk about each year in crypto as being equal to a dog year. It still isn't as many years as Fidelity has been involved in the financial services business. We have a large platform that we provide financial services across institutions, retail individuals, as well as our retirement platform. The Fidelity crypto business started its custody business a few years back and is the underlying custodian for our retail offering and is the custodian for our ETPs. So we cover both the infrastructure side as well as the investment side across Fidelity, and I am personally really excited about this space, and even more excited the fact that it stopped raining. So here we are.
Thank you, Cynthia. Duncan?
Hi, I'm Duncan from 21 Shares. So everything we do is crypto. We're a crypto specialist. I guess today about 9 billion under management, 53 investment products across about 12 venues, exchanges, US, Europe, Australia, and I guess some more to come. You know, how we think about bringing this asset class to the masses is pushing boundaries, always being open to new projects. I think that's something that's, you know, really stood us apart from others in the space as well, being very early adopters of new assets and finding the right projects to take to market.
Great. I'm Teddy Fasaro. I am the president of Bitwise Asset Management. Bitwise is now a company that has offices in San Francisco, New York, and London. We started our business primarily as a United States-based asset management company focused entirely on crypto and digital assets. Our first product was a crypto index fund that we brought to market in 2017. We now have combined about 12 billion in client assets. That includes a European asset management business we acquired last year, which was formerly called ETC Group. It's now called Bitwise Europe. And Ethereum-focused staking company that was previously called Attestant. and is now called Bitwise On-Chain Solutions. And in terms of accelerating crypto adoption, there's sort of two things that I would say. One is that we've always been very focused on leading with education in everything that we do. Our chief investment officer is a guy named Matt Hogan, who's had a long history in being an educator in the ETF industry. And so we've really started by all of our relationships through providing sort of foundational educational information. And I think that a big area that our industry still needs to tackle is talking more clearly about basic crypto and blockchain related topics in a way that the masses can understand and digest a little bit more. So we've been very focused on that. The other thing that we've done at Bitwise is we've always been very focused on the professional investor community. So financial advisors, institutions, other professional investors has been a thing that we've been focused on for several years now, providing education, content, relationships into that channel. And it's hard work, but I think it's also rewarding, and there's longer term relationships can be built there. So that's a little bit about Bitwise.
Thank you, Teddy.
You're welcome.
And congrats on the recent acquisitions.
Thank
you. So for many in crypto, the pivotal moments of last year, which could start the bull markets, was the approval of Bitcoin ETFs, which surpassed even the best prediction from analysts in volume, and also surpassed the other assets ETF launch. So why do you think that is? And who are these customers that have joined the space and wouldn't touch digital asset before? Matt, maybe starting with you.
Yeah, why is this the case? ETFs are the only L2 that has actually worked on Bitcoin, right? It's just a tremendously easy way for TradFi investors to access the underlying asset, specifically the speculative part of the asset. I like to say that this is mostly an emerging market asset class. In America, we've got Zelle and Venmo and 10 credit cards. We don't really need to send peer-to-peer non-dollar payments, but the rest of the world has a strong demand for that. And since the asset price has been appreciating, US investors want access to that speculative characteristics. And when you look at who has been buying the ETF, in the first quarter after launch, hedge fund holdings of Bitcoin ETFs outnumbered investment advisor holdings by a ratio of 5-to-1, even though the regulated investment advisors control 20 times the assets. So I had a prediction that within a year that would reverse, and Bloomberg had a story last week that actually the RIAs now own exactly the same amount as of the end of Q4, $10 billion each. And now with the deleveraging that's happened in the last couple weeks, I have a hunch that the investment advisors now own more than the hedge funds. So it's really quite early still in that 0-to-1 moment of regulated advisors choosing to allocate 1% of their client assets to Bitcoin. I was on a call recently with 400 investment advisors, and 48% of them still had a zero weight to the Bitcoin ETF. So to Teddy's point, there's a lot of kind of, I think, easy lifting on educating advisors on how Bitcoin can improve returns and lower volatility within a diversified portfolio. Unfortunately, the largest broker-dealers, the Morgan Stanleys, Goldman Sachs, Merrill Lynch's, who have these 60-40 models that the advisors then try to mirror, they have not yet introduced a Bitcoin allocation into those model portfolios. That probably slowed down adoption a little bit, but now the asset managers like BlackRock, like VanEck, are beginning to provide a competing model portfolio to the end client, and that's some of the fastest growing parts of our business are these essentially 60-40 models that have a 1 or 2% allocation to Bitcoin. So to answer your question, hedge funds first, and now the investment advisors are starting to pick up the slack.
Interesting. Cynthia, do you have anything to add?
So what I would add to that, and I think the statistics that you've cited come from the SEC disclosure reporting, which is required by large institutional holders, and I think exactly what you just said, the reflection of hedge funds first because they had a trade idea, and RIAs needing to do their diligence, and then I think what you just described is work out what the asset allocation implications are for adding this new asset class into a portfolio for which there is no place for it. The other thing that we saw on the platform is retail adoption. And I think for self-directed investors, that combination and what Teddy you just described about the need for education, there is a great demand and a great amount of interest from investors, both retail and institutional. And our whole focus has been not just providing the widest array of choices in terms of how to access the exposure, but ensuring that there is education for what this asset class is, how it can be used and in a portfolio, and very specifically the volatile nature of what this asset is I think also something that we want to ensure that retail investors who are interested and want to learn more have an understanding of what it is and what the nature of this investment allocation would be to their portfolios.
Duncan or Teddy, do you want to add?
Yeah, I would just add, I think the point that Matthew made, I would just underline about large broker-dealers and the information and permissions that they give to their financial advisors that could be either registered investment advisors or broker-dealers. Many of these large platforms do not even allow their financial advisors to allocate for their clients to Bitcoin ETFs yet. They may allow it if the client calls the advisor and says, hey, I want some exposure to a Bitcoin ETF, they may allow that. But in many cases, they don't allow yet the advisor to go out and make a decision like they can with most other asset classes that are available in ETF format and say, hey, I'm going to put 50 basis points or 1% of all of my clients' portfolio into Bitcoin ETFs or even Ethereum ETFs. Yeah. So to me, that's a mechanical limitation that is still holding back a big part of the mass affluent portfolio in America. And so I think that is something we look forward to seeing change in 2025, I hope. And I think that will be something that will be a big difference in terms of how portfolios are constructed for a lot of the wealth in America.
Just pausing on that, Teddy, how this mechanical blocker could be unlocked, essentially?
I think one thing is it takes time. And the second thing is these platforms all do due diligence. It has to run through their investment operational due diligence. And then often it also has to be consistent in some way. Every organization is a little bit different, but it has to be consistent in some way with the outlook of the office of their chief investment officer or their head strategist. And so you need people like our CIO, Matt, and Matthew here out giving that education so that you have these folks who make the decisions about allocations and investment outlooks from the top down can get comfortable with what can often be a contradiction where maybe they've been critical of Bitcoin or fixed assets in general, like gold, things that don't generate income for a long time, where that outlook change needs to occur on the investment side and on the operational due diligence side. So I think it just takes time.
And they don't change their views overnight, right?
No.
And they do, and they need minimum track records, and also we're past the 1 year. Some of them will have 3 years. There are all these things that need to align for the big money to start to come in. I would say also it would be helpful to have consultants as well come into the space a lot more and do a lot more research. They'll control a lot of the big institutional money as well. The plans, public plan money will be largely dependent on how the consultants decide, where consultants decide crypto fits within a portfolio.
Yeah, I think it's a decision at the board level, and there's a significant amount of innovator's dilemma where these are broker-dealers that are underwriting securities that issuers are trying to sell into the market. So if you allocate 1% to Bitcoin, which has no issuer, you're kind of taking business away from your core business.
Right. So will take time, education, so that at some point 1% or more are being allocated in Bitcoin or other crypto ETFs. talking about other crypto ETFs, Ethereum ETFs have been underwhelmingly performing in the US compared to Bitcoin ETF. And these are conversations I had in private with some of you. Why do you think that is? Matt, if you want to start with you.
Well, Ethereum's been underperforming, and the buy side's not so stupid that they're just going to buy something that they don't think will go up. So I think the market has rightly identified kind of the proof of stake layer one ecosystem as highly fluid and dynamic with no clear winner. The inability to create and redeem the Ethereum ETF in kind instead of using cash hurts the underlying utility of the product, no staking. And so we can debate chicken and egg. Did Ethereum underperform because the ETFs didn't work, or did the ETFs not work because Ethereum underperformed? Like right now we're in a cycle where it requires some catalyst to reverse that dynamic. I can say from trying to educate the investors, remember 48% of them have 0 Bitcoin, that digital gold is a lot easier to explain than open source app store. And like those that's just a clear insight I can make.
Yeah, I would add to that, from the education standpoint, a lot of the conversations with allocators in terms of how to wrap their heads around, what these assets are. And I fully agree. Bitcoin has a much easier to understand narrative around what it is. There's a valuation framework that they can get behind largely. And that is another point of education is valuation, understanding correlations because they have to figure out where in the portfolio to find that 1%. You don't just add 1% on top of your 100 and have leverage. And the other part of this conversation on why is ETH so much smaller and underperforming, I'd say there's maybe a contra view to that, which is the ETH funds, despite the price performance, actually has, we see a lot of flow activity on the ETH funds where people are, seeing this as a vehicle to be able to get exposure to an asset that they are interested in. But I do think that for the larger proportion or population of traditional investors, whether they be retail or institutional, understanding how to think about a valuation framework, understanding what this asset is, has been a huge limitation. Where you are seeing flow activity is for those investors either that are seeing trading opportunities, so you're seeing hedge funds trading, or you are seeing people who actually have gotten their heads around what that valuation proposition is and what this asset is versus Bitcoin.
Right. I would say maybe a bit more simplistic, but it helps to launch a product with a market tailwind. And when the ETH products launch, like a bit of the buzz had come out, right? So just that initial kicker, it just wasn't there for the ETH products. We still see good flow in Europe with our ETP, so we know there's demand for the asset, even though performance has not quite been there.
Yeah.
I think, a simple way of explaining that dynamic is just also that there's nothing like price to change sentiment. And so we'll see, right? Like the Bitcoin ETF moment was one where price was ascending. Everybody was talking about it. It was a huge moment for the industry, for people who had been waiting on it for a long time. And then Ethereum's performance throughout the course of the ETF's life has not been great. Two, it echoes with what Cynthia said. Like, we're having conversations with a lot of investment professionals, financial advisors, that it's taking years, months or years to get comfortable with the Bitcoin story.
Yeah.
And then all of a sudden you come to them a few months later and you're like, but I got this other thing.
Whole nother story. Yeah.
And it's a lot to digest. It's a lot to digest. Yeah. And so I think that it will take more time. But I think it's an interesting and dynamic story, as Matt said. Like there's a lot of fluidity there, but we're excited to continue talking about it. The last thing I'd say is comparing the Ethereum ETF launch to the Bitcoin ETF launch is not all that fair. Right, like the Bitcoin ETF launch is the most successful launch writ large in the history of the ETF industry.
Yeah.
The ETF industry may be the most successful financial innovation of the last 30 years. So that's a huge statement, right?
Right.
If you look at the Ethereum ETFs compared to other ETF launches,
Yes.
it's been a pretty big launch. We've gathered significant assets. There's a bunch of players in the space. The cost is very low. Liquidity is high. We do see the activity day in, day out. So I think that it sort of depends on the frame through which you look at it also.
Yep.
So the fact that Bitcoin has been hugely successful compared to other ETFs and the price impact, also the timing, of course, a question from a staking/yield company, on-chain company. Do you feel staking will increase the excitement of ETH ETF? Maybe we start with the ones that have staked ETH ETF product listed in Europe. Matt, definitely VanEck, and after maybe Teddy, Duncan, and finishing with you, Cynthia.
Yeah, we started staking the ETH in our European Ethereum ETF last year. There's more assets in that product than there are in the US product. We stake about, give or take, 70% of the assets, and we've built some dashboards and algorithms to kind of manage that situation and ensure that we have liquidity to return to shareholders if they redeem. In the US, because of the way that the ETF market is structured and how specifically the Bitcoin and Ethereum ETFs are built, which is it's something called a grantor trust, and it must be a set it and forget it portfolio. You can buy Ethereum. You then can't sell Ethereum and buy some other asset, or sell Ethereum and buy cash. And the action of unstaking and staking is an active decision, and it doesn't fit in that grantor trust framework. So you may have seen a couple weeks ago, Hester Pierce put out a long document. It had 100 different questions for the asset management community and interested stakeholders to try to answer. A lot of the questions in there are around custody and staking and how broker-dealers can touch this asset. That gets to the heart of the ETF creation and redemption process, which for now has to be done with cash. Which is not normal. You should be able to use Bitcoin or use Ethereum to create shares of these ETFs. Once you can do that, then they become much more liquid, and every broker-dealer in the United States will need a strategy for touching crypto assets, and they'll need a strategy for custodying crypto assets. So all these 100 questions are connected. And I can tell you from the industry groups that I'm a part of, we're still working on drafts to answer these 100 questions and get back to the SEC's hands. So I don't want to blame them for being too slow. It's really just the volume of questions, how interconnected they are, has led to this, pause or delay in introducing staking and in-kind creation and redemption. And I think once that happens, it will catalyze a lot more trading. I'd make one more observation around what the options market has done for these ETFs. So IBIT was able to list options on that ETF in the last couple months. We just filed, I think it's today, to CBOE filed to list options on HODL. 3 months ago, there was $20 billion of Bitcoin options on Deribit, $30 billion, and $10 billion on IBIT. Now it's 25 and 15. So Deribit OI is falling, IBIT options outstanding are rising. The TradFi wrapper can really catalyze a lot of growth in using these ETFs as collateral for making other speculative bets. And once we unlock the in-kind creation and redemption, I think that will accelerate. But SEC and stakeholders have to answer a lot of questions first.
Tandy and Duncan, your view on history of your staked ETPs product in Europe and how will it excites maybe more the investors in the US as these products.
I think staking will make a difference. Why would you want to leave money on the table? I guess is what I'd say. It probably will make a bigger difference with hedge fund money. If the basis trade were there right now, it's not. But you're not going to want to. You're going to go. you're going to be long the ETPs in Europe with a yield rather than the ETFs here, I think, without it as part of that basis trade. And the more money that comes in through hedge funds, so the more volumes, the better liquidity, the tighter spreads, it just becomes a more attractive asset. So I definitely think that will make a difference to the product. And I share the view on the in-kind, like that will there's also more money to come with in-kind.
Yeah. I would just say that, just like Duncan said, anybody who cares enough to be making a diligent decision about a product that they're buying, if they have the ability to buy a product in Europe or in the US, which is not all of us, but any type of institution that does, they're going to choose the one that's in Europe because it has more return than the one that's in the US, just by definition of the fact that the ones in Europe are allowed to stake than the ones here. So I do think it will make a difference. I don't know that the types of investors that we talk to, financial advisors, for example, I don't think the thing that's holding them back right now from allocating to Ethereum ETFs is the lack of staking. Because I just don't think that they're getting to the doorstep and then just saying, oh, this doesn't have staking, then I'm not gonna go forward. I don't think that most of them understand staking yet. So like, I just don't think that that's where they're hitting a wall and not getting over it. It may be that if they were getting there, it could stop them, but it's not my perception that that's the issue yet. But I do think that anybody who's looking at this closely and diligently sees the current batch of Ethereum ETFs in the United States as deficient. There's extra yield available and the funds don't earn it. And so I think that through any lens, that's challenging from a product structuring perspective.
And you think so because they first need to be educated on the underlying assets of what is ETH compared to Bitcoin.
Right.
And then the extra component of yield will definitely be attractive, but will come after.
Right. It's sort of like I don't think we've even reached that level of the video game yet. Yeah, it's like they're still trying to pass the Bitcoin level. And it's like we haven't even gotten to the Ethereum level yet. And once we get to the Ethereum level, maybe like the final boss is, oh, you don't have staking? Like, okay. But still, for now, yeah.
Okay, still stuck at the BTC level of the video game.
Right,
okay.
right.
Okay.
We're getting them off zero with BTC still. So I think we have time as an industry to solve it, in other words.
Great. And Sinchi, you love me for putting you under the spot, but Fidelity has filed for a staked ETH ETF last week. So it seems there might be demand or excitement for some investors to these kind of product. Can you share a little bit more about that?
To be fair, we filed last summer for a staked ETH product, and we're told if we wanted to launch the product with staking, we could continue the conversation. But if we wanted to launch the product with everybody else, we would change our registration statement. And so from our standpoint, I think there's a couple of perspectives. Fully agree with everything that everyone else has said. But from the standpoint of being an institutional holder of ETH, being able to participate in the security of the network is an important part of being an investor in this asset. And so that's why we pushed in the first instance when we made our filing to include staking, and that's why we've refiled alongside of everybody else. From the standpoint of, do I think that having a staking yield in ETH is going to move the needle, right? For investors who are interested in the ETF wrapper, probably not. But we think it's a much more holistic and the right investment exposure because of the fact that participating in the security of the network is being a responsible institutional holder of ETH. We are actually more excited, though, about the coming more constructive conversations, and I think everybody heard from the very distinguished panel that was here earlier around getting market structure clarity and being able to come up with more innovative and more great research-driven portfolios that not just give you exposure to the asset, but a whole new yield-generating, non-correlated set of yields that, right, from a financial services and a financial solution standpoint, will give us a whole new tool set in how we build portfolios for our investors. That is what we're also very excited about.
Great. And then a good segue to the multi-billion-dollar question. You can take out your pulley markets and maybe think we'll reach the third level of the video game. Will these staked ETF be approved this year in the US? Matt, let's start with you. Your opinion on that.
I think the odds are greater than 50-50 that they'll be out by the end of the year. VanEck has been a bit more judicious in launching the or filing for single token ETPs in the US, but we did make a filing on Friday for the first Avalanche ETF, and we included staking in that application. But if you read it, it's very light on details. We basically noticed that, Fidelity kind of put a general comment about staking in there. There isn't enough, I don't think they have the answers yet on how exactly the mechanics of this will work. So we kind of put out a first draft, but it's going to depend on conversations with the regulator, getting these 100 questions from Hester answered, and then having some dialogue about how the mechanism will work. And so the deadline on that Avalanche, is probably right around the end of the year for the final deadline. So I think it's better than 50-50, but I don't think it's 90%.
Right. So he's currently thanking you for the definition, to be more precise.
I think, to be fair, where we are in these conversations it is still iterative, but I would say definitely a non-zero and chance that we do see some form of staking in the ETPs this year. We'd like to, and maybe I'll just say unofficially, we'd like to see staking this year.
Right.
I'm gonna have to say something more bold than 50-50 or non-zero. We feel pretty confident. We think it will come this year. We don't think it will be the end of the year. We feel pretty good that it's going to come earlier in the second half of the year.
Since Duncan stole the good answer,
Yeah.
I'll say, just to kind of point back to the story that Cynthia told about what happened last year. So just to give you a sense of the type of relationship that we have with the regulators now, Bitwise was given the same answer that Fidelity was given. We were told, you take this out if you want to proceed with the others.
Yeah.
That is, there's not a lot of knowledge to be gained from that comment, right? We don't know why. We can guess based on the other actions that the SEC had taken against other staking providers. But we weren't told you take it out because A conflicts with this regulation or the implementation. It conflicts with another part of our interpretive guidance. We were just told take it out and you can go, leave it in and you can't. And so contrast that to what's happening now, where you heard what Matt was sharing about Commissioner Peirce and the crypto task force issuing a long list of questions, asking directly industry participants what they want to see happen. Almost every asset manager that I know of has answered that question by saying we want to see in-kind, we want to see staking. And so it's just a very different environment for our industry right now, where we're being given the opportunity to work constructively with our regulators, which is great. But I also think, like Matthew alluded to, I think with staking in an ETF in the US, there are also some complicated, like genuinely complicated things that need to be worked out about how you're going to do it, how you're going to disclose it, how selections are going to be made, tax status, liquidity. I think these are not like the sad thing about the Bitcoin ETF was it was super easy to do. We could have done it 6 years ago, right? with staking in an ETF, all the protocols are different, liquidity features are different, entry queue, exit queue in Ethereum is dynamic. Yeah. So how you resolve this is not like, I'm not saying it's not solvable, it is, but it's not the simplest thing in the world, the way that doing a a Bitcoin or an Ethereum spot ETF that just holds the asset in custody is super simple.
Yeah, fully agree with that last point is, the conversations that we, started having a few years ago around liquidity for staked ETH are still going on today.
Yeah.
And the solutions that different, organizations have come up with, different providers have come up with, have not been tested from a market and scale standpoint as yet. So we're now at that right point in the market where we've got products and we will have the need for that liquidity to be able to test these solutions and put them to use. And that is maybe a little bit of right time, right place, and would like to see that happen.
And Cynthia, you're mentioning liquidity and tax implication,
Yeah.
right?
Yeah, the tax conversation, I think we heard about the tax discussions earlier as well in structuring, which is unique to the tax code that we have here.
And some of you on this panel filed in the US for other type of assets. You mentioned Avalanche with staking, even if the definition is not that precise yet, or Solana. How do you think of the strategy of listing other assets, and what is the demand from investors, even if they have to pass, I get it, the fifth level of the video game, but yeah, Matt, how do you see the demand for other assets of Bitcoin and Ethereum?
Yeah, well, we're being, I'd say, on the more careful side in terms of bringing assets to the market. There's been an oversupply of tokens in crypto. I think that's not a controversial thing to say. Part of the reason why Bitcoin dominance is so high. So when we bring an ETF to the market, we want to see internal conviction that the project is attractive, support from counterparties who are willing to work with us on this protocol and create the plumbing necessary. And then the third is client demand. And we have not gotten a ton of client demand for a Cardano ETF or a XRP ETF. And what we found over the cycles is that the actively managed products perform better. So we've been focusing on our liquid token hedge fund. We've just filed for an actively managed ETF, which will be our first in the space, called On-Chain Economy ETF, which is going to own companies that have a clear strategy to make money from digital assets. Most of those companies are more engaged with the Bitcoin than Ethereum. But we're doubling down on active management this year, and the Avalanche was kind of a special situation. You might see one more special situation in the next couple months, but we're going to focus on active and avoiding pitfalls.
Okay, thanks. That's super clear. Yeah, how do you think of other assets being listed?
Yeah. So a little bit of what Matt just said. We built our research and our data analytics team within the asset management division, and Fidelity's asset management division being long active investors. We are research-led in the way that we build portfolios, and that is the lens through which we've built our research team as well. We've constructed our own indices, and we're looking forward to bringing more investment exposures to the market. Single asset ETPs have been, and we saw this with both Bitcoin and Ethereum, as being really good entry points for retail and institutional investors that prefer having a very well-known wrapper in their back offices and not having to adjust the way in which their back offices are able to process these exposures in their investment portfolios. As we think about bringing multi-token portfolios to the market, there is going to be the need to put them into these wrappers, and ultimately on our custody side of the business, they also are working toward building out their overall platform and being able to provide investors who want to have direct holdings that option as well.
I would say, I don't know in terms of demand. You just don't always, you don't always know when you're going to bring product to market. One of the big problems about this with ETFs and ETPs is that there's a disintermediation with the end buyer. You can't always talk to them. Of course, you can have institutional sales teams so that, like in Europe, half of our assets are institutional, so we can engage with the institutional buyer. We can learn about what's interesting to them. A number of them will seed new products for us. In the US, our business is far more disintermediated. And so you don't always know whether if the demand is going to be there for a product, but that's part of trying and seeing what's worked. Does your research resonate? Does your marketing resonate with the investor? All these things you don't really know until you get the product into the market. But we have, as everybody, people know, we have several filings already for products in the market.
Yeah, for Bitwise, I would say we like more single tokens. We're gonna do more single tokens. We think that investors like to trade in their brokerage account instead of having to go onto an app and trade there. So a lot of investors prefer to do their crypto investing or trading through their Fidelity brokerage or their Schwab account, whatever it is. And so we're going to do more there. But the thing I would add to and we like active too. I know that VanEck likes that a lot. But we like index also. So our first product is an index fund. We think an index also resonates with financial advisors and financial professionals who they don't want to talk to us once a quarter about what's this new token? What's this new coin? Do I need to be thinking about Solana instead of Ethereum now? Remember, we hardly got them comfortable with Ethereum yet. So I think one of the initial theses of Bitwise and our investment strategy has been that what an index can do for financial advisors who are thinking about a 1 to 5% allocation to crypto is maybe Bitcoin and Ethereum are the only two things that matter. Maybe it's also Solana and XRP. Maybe there's two other coins that we haven't even talked about yet, like Avalanche, that are really important, and they become very valuable over the long term. And I think what an index does for those type of investors who want to be on the theme but don't want to pay attention to it every day, an index allows them to kind of participate in that market cap growth, have the strategy rebalance for them and reweight based on what matters at that time. And it's something that we think makes sense. Maybe the market is not ready for it yet. We think as our market matures, it's something that we think makes a lot of sense for a big swath of investors.
Right. Conscious of time, maybe one very global question linked to your business and maybe more widely to the markets is I see ETF as an off-chain wrapper for on-chain assets, so that new investors, institutional investors, and new retail investors can get access or be exposed to these digital assets. You could think of tokenized assets in some of their forms as a wrapper, an on-chain wrapper of an off-chain product, so that you can have better distribution today of these off-chain products. Do you feel it's part of your firm to build and distribute such products? You mentioned it in the beginning of the talk, Matthew. Are you thinking of tokenized assets and ways of distributing on chain?
We are, and you'll see our first real world asset was the Agora stablecoin, which Nick spoke about in the last panel. But in the next months, you'll see a number of tokenized fund offerings from us. But again, I want to be careful on that. It's not really clear how we're going to make a lot of money from selling a tokenized T-bill. And so, we own 10% of our own Bitcoin ETF. That's the hurdle rate is Bitcoin. You got to be very careful putting a whole lot of investment into a commodity T-bill product that doesn't even have distribution. So, again, I'm a little more cautious on that side personally.
So I think what you described as the on-chain or the off-chain wrapper for an on-chain asset or the on-chain wrapper for an off-chain asset, I think what that facilitates is capital flows between traditional markets and digital markets. And these are two vehicles that facilitate that flow. And what we're seeing and what we think that this technology represents is a new set of rails for how it is that we can see capital allocated across markets. And what we think about for tokenized assets is not just that on-chain investors can now get access to off-chain traditional investment instruments, but we also think about that from the efficiency of capital flows. That you can now satisfy demand for capital through these traditional instruments with on-chain capital. And vice versa, we saw with the ETPs ushering in traditional capital into digital markets that then drive growth in digital markets. And this integration of traditional and digital markets is, I think, what we are going to see in the coming years as traditional investors are interested in new ways to be able to allocate capital on chain and figuring out how to bring regulated institutions into DeFi. We see on-chain investors now increasingly interested in new ways to be able to generate both alpha and yield through traditional instruments that may be less volatile than what we see in DeFi. And I think there are quite a few large on-chain investors that we've talked to who are increasingly interested in getting access to traditional exposures.
Well, I mean, in my last job, a lot of what I did was that kind of asset tokenization. So that was I love it. I love the thing. I think there are tons of use cases. Distribution is one, but it's probably much further down the road. I actually think things like collateral mobility is the most interesting thing to an asset manager or a bank today. But 21 Shares it's all about. So we believe that blockchain is going to be this transformational technology. So it's not just across finance, but other sectors for people, and that everybody should have the ability to get exposure to that investment opportunity that comes from it. So our job, as we see it, is to bring that to people. So today that is taking Web3 and putting it into a Web2 wrapper, and that's what we're going to stick with.
Yeah, it's all been said by the panel, but I would just say it is a real paradox, right? Like the most successful financial product based on blockchain thus far has been the Bitcoin ETF, which is taking it off of the new and improved rails and putting it into the old decrepit rails. And it's
level zero.
it's level zero in the video game. But it sort of makes sense, right? Like when cars were first invented, they had to try to drive on roads that were built for wagon wheels, and it didn't work that well. Yeah. It takes a long time to repave all the roads so that the car can work well on them instead of getting stuck in the wagon ruts, and to get the mud off the street so that the car can actually move along it. So I think a big thing that we're all participating in, whether we know it or not, is building the infrastructure such that those old wagon wheel roads can be cleared off and paved so that everything can move on blockchain rails. I think there are a lot of interesting questions in there, like Matt brought up, who's going to make money off that transition? Is it just going to be the big banks that are moving collateral around and can bring down costs? Are there actually startup companies that can find ways to generate serious and growing revenue off of this transition? But I think for anyone who has spent a lot of time looking at the capability of the new infrastructure, the answer is obvious that at some point, all of our financial instruments and our value that moves around on the internet is gonna move on blockchains. It's not gonna move through omnibus accounts and like the system at the DTC and federal clearing desks. This is just not as good. So it will be an upgrade, but how and when it occurs, and when we can take the Bitcoin ETFs and put them back on chain is a
non-chain
But
product.
not
You want to tokenize it?
No, we're not tokenizing
yes.
ETP.
Oh,
We're
God.
just going to put the Bitcoin back in people's hands.
Yeah.
So you essentially saying of course, non-chain product off-chain is then putting back on-chain to be distributed, right?
It all goes there eventually.
Cynthia seems thrilled about it. So
Yeah.
We're not tokenizing a off-chain vehicle that holds on-chain assets.
Thank you all very much for your time. It was a very exciting last panel of the day on crypto ETPs and ETFs. Yeah, thank you. Thank you for your time. Thank you, Katana.